Dear friends, welcome to weekly view on markets. Markets show consolidation during this week, with most of the indices and sectors losing the momentum. This is quite normal after 2 weeks of steep rally. Charts indicate that consolidation may continue for few more days. Quarterly four results season is coming to an end by next week. Many small companies are yet to announce their results in the coming week. Q4 results have been good in overall. RBI policy meeting in June first week will be the next big trigger for the markets. RBI has announced record dividend of 1.69 lakh crores to the government. This will help the government to increase expenditure on capex and hold the fiscal deficit level within limits. Lower fiscal deficit combined with rate cuts by RBI will boost growth in the economy and corporate earnings. Markets are expected to go to higher levels in expectation of earning growth of the companies. Investors have to remain invested and be patient. Now let us look at performance of different indices. Nifty has closed at 24,853 and lost 167 points during this week. Bank Nifty gained 43 points and closed at 55,398. Mid-cap index lost 372 points and closed at 56,687. Small cap index gained 83 points and closed at 17,643. So all the different indices had small gains or losses. Basically, it is a week of consolidation. India VIX is at 17.27. It has gone up by around 4%. Now let us look at different sectors. Realty sector gained around 2.66%. PSU banks gained about 1.12%. Metals, media, NBFCs, all these sectors were consolidating with small gains. Consumer durables lost around 2.16%. Auto sector lost around 1.83%. Information technology lost about 1.5%. Oil and gas, commodities, FMCG, pharma, manufacturing, healthcare, infrastructure, private banks, all were consolidating with minor losses. So by looking at the sectors also, we can conclude that this week was a consolidation week in the market. Now let us look at technical charts. This is the daily chart of Nifty index. This is the resistance line which I had drawn in the previous week. After crossing this resistance line, the selling pressure was there and Nifty has come below 25,000. So 25,000 and 25,200 remains a strong resistance level for Nifty. This resistance have to be taken off. After that, we'll see a next good up move in Nifty index. This is the chart of Nifty mid cap index. Mid cap index also is showing some kind of consolidation after the sharp up move. Nifty mid cap index also is likely to continue consolidation between 55,000 on the lower side and 58,000 on the higher side. This is the chart of Nifty small cap index. We can see on the chart that small cap index is also consolidating for last 1 week, and this consolidation is likely to continue in the coming week Nifty small cap index has to cross 18,000 level. This is the resistance. Once it crosses this, we'll see next big move in small cap index also. Till such time, it will trade between 17,000 and 18,000. This is the chart of Bank Nifty index. Bank Nifty index is also showing a consolidation pattern and consolidation in the range of 54,500 and 56,000. This consolidation is likely to continue. We'll see good up move only when Bank Nifty crosses 56,000 resistance level. Now let us look at some of the macroeconomic fundamental parameters. RBI forex reserves is at 685.7 billion US dollars. It has come down by 4.9 billion US dollars during this week. Foreign exchange rate is 85 rupees 21 paise per dollar and dollar index is at 99.11. So dollar index has come down from around 109 level to 99.11. So this indicates that globally the demand for dollars has come down. That is the reason we see rupee has strengthened from around 88 to 85.21 per dollar. Brent crude price is at 65.39 dollar per barrel. The lower crude price is good for Indian economy. Our oil imports will be less, and that will help to reduce the inflation in the economy, also contain the fiscal deficit that will give for room for RBI to cut the rates. RBI meeting is there in the first week of June, and RBI is likely to cut the rates as inflation also is coming down. If RBI cuts the rates, then we'll see a good rally in the market. Gold price has fallen from around 1 lakh rupees per 10 grams to 96,400 for 10 grams 24 carat. The gold demand is also coming down as a lot of uncertainty around Russia-Ukraine war and US trade war and also India-Pakistan tensions come down. When the panic comes down, that time the gold prices generally comes down. FIIs have sold 11,591 crore during this week. DIIs have bought 11,199 crore in equity during this week. We can see that FII selling is more or less matched by DII buying. That is why the market has gone into a consolidation. Previous week we had seen buying by both FIIs and DIIs. In this week, FIIs have sold and DIIs have bought equal quantity, and market has gone into a consolidation. So in the coming week, if FIIs again start buying, we may see market going to the higher levels. Otherwise, market may consolidate. So generally, it is buy on dip market. At lower levels, we have seen that buying is coming. So that is why the fall in the market is also limited, and also the upside is limited for the immediate near future. RBI has given a dividend of 2.69 lakh crore to the government. This will help the government to reduce their fiscal deficit, also spend on infrastructure and capex. That will help to boost the economy, and in turn, that will boost corporate profits. And when the corporate profits goes up, the market is likely to go to the higher levels. So far, the results of the companies are good. On average, profit has gone up by 16.18%. Mid cap profits have gone up by around 15.25%. Small cap profits have gone up by 29.37%. So we are seeing a lot of buoyancy and momentum in the small cap. That the underlying factor is that small cap companies' profits on average has gone up by 29%. The earnings growth is seen in the small cap sector. That is why we are seeing small cap is always outperforming the market. Market valuation is looks quite reasonable by looking at 16% earning growth 1 year forward. So Nifty is trading at a historical PE of 22.39. So 1 year forward PE will be at around 20. Nifty mid cap index is trading at historical PE of 33.53, and 1 year forward PE should be at around 28. Nifty small cap index is trading at a historical PE of 31.64. 1 year forward PE with a earning growth of 29%. The Nifty small cap PE forward PE would be at around 25, 26, and with high earning growth. So when earning growth is quite high, the PE generally tends to be on the higher end. So still there are opportunities in the mid cap and small cap companies with good earnings growth. Investors can look at buying those stocks. Mutual fund investors should not worry. They should continue their investments. They will get good returns in the long run. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.